find out, how did you two, or why did the two of you start in real estate? What gave you the inspiration, or what made you go into real estate?
Sure, that's a great question. I'll start, and then Quincy will give you his story too. I've always had an inkling for real estate back even before the Great Recession of 2008. I didn't know why. I think more so than anything, it was a very natural fondness for real estate because my parents were into real estate. They had bought different properties around South Florida, and then in Gainesville, they had invested in a villa. In Atlanta, they had invested in a townhouse, and then they bought land in northeastern Atlanta. So I grew up seeing my parents make these investments, did not connect the dots about generational wealth or the potential yet. I was very young. And I fast forward to past 2008, I got the job and an opportunity to work for a commercial property tax consulting firm. And I was doing marketing for them, talking to CEOs and talking to CFOs for major REITs and development companies, and realizing that I wanted to not just talk the lingo, I wanted to understand the lingo. Mm-hmm. So I decided to go back to school to study real estate development because, and I should say this, not many people in the real estate community look like us. Just saying. Okay. So I wanted to be, more than just a pretty face. I wanted to really understand the numbers and, what's going on in the market and the major players. So I got my master's in real estate. And then after I graduated, I got my license as a real estate agent because I realized that it makes sense if I'm going to know real estate to actually help with the sale and the transaction as well to make money. Now, more than anything, though, I feel like real estate is a major vehicle for generational wealth, as I'm sure you guys do as well. And one of the things that I'm bringing to the table for my own family is getting them involved in the investment side, getting them back involved in the investment side. They were involved, but they sold a lot of their assets over the years. So now I'm getting them back involved in that. So that's my story. That's why I got involved in real estate.
All right, awesome. Thank you.
Welcome. As for me, I was sort of similar story again. I was around real estate. I have two uncles that was always investing in real estate when I was a kid, but same thing as Gayon, I couldn't really connect the dots. I knew they was doing something and I knew they made a lot of money, but for a kid, it was just like, what could you buy me? I wasn't concerned with the business side. So fast forward, I'm 21, 22 out on my own, and I was wanting to buy a house. I just had an urge to just want to be a homeowner. And I bought a house, found a house in an area that was new developing in North Carolina. And I bought it. It was a great price on the house. I think maybe I bought it for about 60 grand. And I got to the closing table, and the lawyer pulled out the comps on the property. So the comps show like whatever the property is worth. So he pulled out the comps on the property, and the property was worth like 93 grand. So he just jokingly said to me, hey, you can put this back on the market and make 30 grand. So 21, 22, I stopped and looked, and I was like, is it really that easy? And everybody was laughing. It was like, yeah, it's just that easy. So that sparked my interest in saying, well, if this is that easy, then I need to start learning how to do this. So I went from there, and like your parents, I had owned up to 10 homes at one time. Got into it, real estate, as far as flipping, wanted to learn that. And almost every aspect of real estate, I either tried it or figured out that it wasn't my thing, and kind of narrowed my niche down. I was a realtor for about a year or two in North Carolina and Virginia, because those were the states I was primarily operating business in. And I just didn't want to pay anybody to look up properties for me. So I could just become a realtor, and I can look up my own properties, save 3%. So it was all about, for me, saving something on the bottom line. Then when they start put these requirements on you to go to meetings and get certifications and all that, I was like, well, I'll just pay the 3% because I don't want to go through all of that. Yeah, I didn't. I was like, I can't. But yeah, that's how I got started and kind of have moved forward trying to narrow down because um, I know you guys going to probably have a ton of questions, but for me, um, real estate is about finding wherever your niche is. Because when I think about real estate, it's a lot. Most
Yeah.
people think it's buying and selling a home, but it is a ton of things that you can do in real estate. And some of the people I've seen that was brilliant guys and brilliant girls that came in smart, educated, come into real estate, they kind of fizzle out because there's
Right.
so much you can do in real estate, and then you spread yourself too thin, and then they say, well, I came into real estate, it doesn't work, I didn't make money in it, so they become a little bit sour about the opportunity. But you have to find out
And focus.
what's your niche, what you're going to focus on, and why you're buying or why you're in the real estate game, and then you can get there and be successful.
All right, awesome. Well, thank you. Now, also, I forgot to mention to you guys, we're babysitting. So if I go off for a few minutes at a time, it's because our granddaughter is right here. I thought she was going to sleep through this, but unfortunately, she just woke up. So we're
No worries.
multitasking. Okay.
Grandma for the first
Fantastic.
time, so.
That's good real estate quality multitasking.
So I have a question, Quincy. It sounds like, just to talk a little bit more about your story, it sounds like you've gone from like flipping to now multifamily, and you've just discovered that multifamily is maybe where it's at for you, or how, can you talk about the things that you've narrowed down for yourself thus so far?
Yeah, so when I came in, I like buying that house, getting the appraisal and saying, hey, it's worth 30 grand more than it is, and sell it. So I wanted to do that. That's initially what I wanted to do because it seemed like the most plausible thing. So that led me to flipping. And then as I got into flipping and I'm learning, I'm going to the courts and I'm seeing people, I got into going to the courthouse steps and auctioning on property. So I was meeting people that was lending money, that was and then so I read Rich Dad Poor Dad,
Just about to
like
mention that.
like
Yes.
most everybody, and I was like, oh, okay, cash flow is where's that. So I started saying, okay, now I'm gonna not flip as much. I'll just get the single families, and I'll flip one, and flip two, flip three, and on the third one, I'll have enough cash to buy a rental. So that was like my business plan in a sense without having a business plan. Buy a house, flip it, buy a house, flip it, buy a house, flip it, fourth one, buy the house, rent it. Um, so I did that. And then throughout the time of flipping, you start learning about tax sales and foreclosures. And in that time of 2008 and 9, that's when I like incorporated and started really getting into business. And houses were cheap, 20, 30, 40 grand in North Carolina. So it was really easy to get in and out of the house without a lot of money. Um, Fast forward to meeting Gayon and going through the MSRED program. I just was sitting in class and had an aha moment. I was like, man, I got 10 houses, and the debt that I have on the 10 houses, if I could have bought one apartment complex for less debt and had a better cash flow. So I immediately just started to switch my mindset and say, okay, I just stopped doing single family just completely and started looking extensively at single family homes. And then from the single family, I mean, no, the multifamily, from the multifamily homes, we got into the development. Like one of my uncles is a partner of mine now, and we're buying raw land and developing single family communities, or we're buying a lot here and we build a house, sell it, buy another lot, because that was for me more profit on the bottom line than flipping. So and then it's a lot easier than you think it was. So that was some of the things that kind of drove me to get away from single family, just renovations and flipping contracts and things like that.
Now, I have a question as far as with the finance. If you're not one that doesn't really like debt, what do you think about cash flowing your own if you can, or versus taking out a loan and the debt that's involved?
Personally, I think I try to leverage my cash over 4 or 5 different projects. So if I got 100 grand, just for example, if I got 100 grand, I'm not going to buy a lot of land, build a property, and get the equipment and pay the contractors with the 100 grand. If I can do that with 20 grand and leverage 80, and then I can do that over 3 lots, then I can leverage that 100 grand over 3 lots instead of 1 lot of going all the way in. Simply because if I lose, if I go in a bad deal, none of us going to go in the real estate and try to go into a bad deal. But things happen. Contractors happen. And just bad things happen. Timing happens. COVID happens. There was some people out that had some deals out there that were great before COVID, and then COVID hit, and now their deals are bottom out. So, but for me, I like to try to leverage my income over several different deals, because if one go bad, then I still got money in the bank, and then I got 2 more projects that I'm looking at working on. I got money tied up in it. That's to me is the best way.
I think so too, because I feel like using other people's money work for you.
Yes. Yeah.
You know, if you're using your money, then something wrong there.
Yes. Because like for instance, when I tell you my uncle is my partner, like he takes me through, because he's real estate. He's been in it 30, 35 years doing it. He understands it in and out. But for the multifamily deal, he don't get it. He's just been doing development for single family renovations his entire career. So when I brought the multifamily ideal to him, and I pitch my deals to him, he doesn't get it. It's like his brain shut off. He don't understand it. And he's like very hesitant to go in on the multifamily deal with me. But I can bring him a lot and say, hey, look, this is the lot. Here's the contractor. Here's the inspection. Here's what we need up front. Here's the bottom line. And he's all in. Okay, let's do it. But same thing with multifamily, but triple the profit. And he's hesitant. It's just because it's his understanding of his niche of single family he's comfortable with, but he's not comfortable with multifamily. So he's not comfortable with investing his money in a deal that he doesn't understand. So, it's
So how has the multifamily things worked for you so far? Like, it's like some kind of apartment building that has like 10 units or something, and then you're fixing it up, renting it, and then just holding it? Or what is that? Can you talk a little bit about what that looks like with the multifamily units?
Yeah, me and Gayon was just looking at some properties yesterday. I'm working on a different kind of strategy of getting into properties and getting at them very quick. But initially, what I'm looking for is small apartments like 10, 20, 30 units, 5, even duplexes, quadplexes, and triplexes. Just to get in those. And for me, it's easier for me. I'm finding it easier than when I initially got into single family, because most apartment owners are corporations or they're investors like us. So they understand like what's going on. They don't feel like being slighted because you're doing, like, single family is rough. Like people are emotionally attached to their homes, so sometimes they don't want you to come in their homes, or they don't want a contract. I don't want the contract to come in and out my house. I'm like, well, ma'am, this is a part of the process for me to establish a value. But with the multifamily, I'm finding it just a little bit more receptive, because investors work with investors better than people that don't understand the business. And I'm finding that if you're an investor and you're used to investing for cash flow, you're more likely to take a deal from me as another investor that still provides you cash flow, versus if you're just a person that owns a house and then I'm gonna structure a deal where you're going to get $500 a month. You're like, I don't want $500 a month. I want the $8,000 that I'm gonna get at closing. So it's hard to get people to understand that when they're not investors, but multifamily is really, really, really what I'm saying from an investor's point of view is really, really more lucrative, and it's really, really more easier to get in.
I'm with you there, but us, what we want to know, where to get a loan, how to get a loan, because we try single families. Me and my wife, we bought houses, we live on them for a year or two, and we sell, we make some money.
Mm-hmm.
We're doing that a lot. We're moving a lot too, from New York to Florida, Florida to Dallas, and 3 times we already moving Dallas. Then that's what we're doing now.
Mm-hmm.
And we was gonna buy a house. We think because of COVID, we will lose money on it. He had at least $50,000 equity on it,
Mm-hmm.
but we think the house gonna go down. It's not time to buy yet. Then that's why we not just finished by house. Then what we want to know is when to get to the market right now and how to find finance, say to own a 10, 20, 100 apartments building.
Well, to your first question, when to get in the market with real estate in the different niches, I think that it's always a good time to get into the market. You just have to understand market cycles and then where you're at in the cycle. So just like for a simple example, if you're in a real estate area like Dallas, who's they're in a peak market. So if they're going up, there might be a time for you to sell. So if things are tanking, then you got to be looking to buy. So either way, you're in wherever you're at in the market cycle, wherever you're at in the states in your region. It just depends on you knowing your cycle, you knowing where you're at in the real estate area and region, so that this thing is asking me to upgrade. So that you know where and when to buy. So being in the real estate market, being in the real estate industry, anytime is the best time to be in it. I hope that's not so circular that you don't get it. But as far as financing, what I'm finding out with multifamily, a lot of multifamily apartment owners will do own and finance, at least a portion of that. So if you have a 10-unit apartment and it's worth, you got it under contract for $500,000, and maybe you could give, like you said, you had that $100,000, you want to spend $20,000 here, $20,000 there. Maybe that investor that you're in contract with will take $20,000 up front and $3,000 a month for 60 months until you establish the property, stabilize the property, and be able to go in and get traditional funding and refinance and pay him out of the deal.
Okay.
Good to know.
But just, I was in Florida in 2007, 2008 when the market crashed down there.
Yeah, it was beautiful.
It was ugly. The thing is, we don't know if COVID gonna do that.
Mm-hmm.
I don't know what you think. Because if COVID gonna do that, it's not the time to buy right now.
See,
Yeah.
it depends on where you're at in your mindset. So see, it's so telling when you said it was ugly and I said it was beautiful. That was the time that I got into the real estate, like really got into it and established it.
Yeah.
Okay, this is going to be a business that I'm gonna pursue. And houses were selling in North Carolina for 30 grand, 22 grand, 19 grand. I was picking up houses easy, like for less than you can get a car.
Yeah.
So
That's also a different submarket. He's talking about North Carolina, right?
right,
'Cause I'm like,
that area was North Carolina, but still in Florida we had houses that was
yes.
500,000 a year before that was going for 250, 180,
Right.
175. So it's all relative. The numbers, the zeros on the end in real estate really doesn't matter.
It's exactly what I say. It was time to buy then,
Mm-hmm.
but you have to wait until it crash.
Yeah, there's a couple of things too. I mean, and I don't know if Quincy will agree with me here, but I do want to, I try to level set with a lot of my investor clients that come to me like, Gayon, I really want to buy right now, but I'm waiting for the housing market to crash. And I kind of have to level set with them to say, look, if you're waiting for something like 2008, that's not going to happen right now.
Right.
That's not what's happening with the coronavirus. 2008, there was a huge, massive regulation reform that had to do with the mortgage industry. It had to do with a lot of what do you call it? The mortgage is being sold poorly on the market, and it's crashing because of poor regulations left, right, and center. Whereas now we're dealing with people who potentially may lose their home, may go into foreclosure. Yes, we might see things being sold maybe a little bit under market by banks, but they're not going to sell it for under market like what was happening in 2008, because banks aren't trying to sell things for pennies on the dollar like back then. So when people say they're looking for a crash, that I understand what they're saying. You're looking for something under market, but we're not going to necessarily have the same crisis as last time. That's not what I'm hearing from my economists, and that's not what I'm seeing in the metrics.
No, but you can see that by a government willing to put money on the market for that not to happen. In 2008, nobody did nothing.
Right.
We just let it crash.
Yeah.
Right, and it's still it's all relative because if you're looking around universities and military posts in the United States, they having a lot of they're getting hit harder because the kids went home. So all of those guys around there that was renting houses in those areas, or that was that had those off campus dorm house living, those guys are taking a big hit. And a lot of those guys are looking ready to get out from under those properties because they don't want to be in that situation again. So that's a huge opportunity for investors, like I
In
said,
those segments, in that segment,
get in
right?
those and that niche of the arena when you're talking about investing. So you just, like I said, you just gotta have to
On your
get in
niche.
and find out what the opportunities are, because they're always there, whether it's a good market, bad market,
That would be
crash or not.
that would be my next question.
I had a lot of issues that I had.
Find it good. Are you speaking, Sophie?
Yeah,
Find a good deal.
I wanted him to kind of share like what is trending in the real estate industry right now. Like you said, that example that you just gave us right now. What are other trending investments that's making a lot of money that you see out there?
Flipping is good. Flipping is real estate. Flipping the actual properties is good. It's if you're not a good team builder, I think it can be problematic. Real estate, the flipping the contract, what people call wholesaling.
Wholesaling.
That's good at any time, anywhere, any market. But once again, you have to be a good team builder and maybe a good marketer. And
what do you mean by good team builder when we talk about flipping, like building teams to help you flip homes?
Yeah, because you're gonna need a team. You're gonna need maybe 2 or 3. It depends on how big you want to be. Because at my time, I wanted to always have 3. I wanted to have 1 complete or about complete, 1 purchase, and 1 in the pipeline. So I always wanted to have 3 contracting crews ready. So that takes time to build. That takes trust to build. That takes going out into that market and establishing relationships with contractors, vendors, lawyers, closing agents, all different kinds of aspects when you come into not wholesaling, but renovating and what they call them flipping properties. So you have to be aware of that before you go in, and you have to be ready to lead a team, because it's your business, it's your team, even though they don't even have to know that they're on your team. It's not like they have to wear your t-shirt. They don't have to wear your t-shirt, but they have to be able to do the things that you got to do necessary to be successful. So if I got 3 contracting teams, I don't need them to be out doing another guy's property. So it was always my intentions to keep those 3 contracting teams busy, because soon as you have a lag in business or in the pipeline, they're going to go off, because those guys, they want to eat. They got to feed their crews, because the lead contractor, he has a crew, and then that crew will leave him if he's not working. So so you got to be mindful of that, and also understand that don't take it personal.
Did you do any of the work yourself, just out of curiosity?
Yeah, I did some painting, and it hurt. I hung some doors and put in some windows. In this business, you're gonna have to learn how to do some stuff, because sometimes people just, especially for me, because I was an out of town investor, so I was in Virginia, invested in North Carolina, and then when I was in North Carolina, I was in Virginia, and then in South Florida and South Carolina. So I was always coming in for a couple of days and then leaving. So when you're not there, contractors, they'll give you any kind of price. So if like for me, when I'm looking at renovation deals, I already have an amount that I'm gonna spend. So I'll go to a contract and I'll say, okay, I bought the house for, and I'm transparent. Like a lot of people don't do that, but I'm transparent. I'll be like, hey, I bought the house for 20 grand. I only want to spend 15 grand on the house to get it before I put it on the market. I only want to spend that. That's my budget for the house. I don't want to go over that. This is what I need done. I have it line by line, all the way out to the place that they can buy the item from. And I tell them, give me a bid. Can you do this in 15 grand? So most people, if they want to work, if they need the cash, they'll say yes. And then when they say yes, they try to hit you with all of the change orders. They want to, oh, well, I didn't see this before I agreed to the 15 grand. And so putting this in is going to be an extra 5. And it's like, man, that's a light bulb. So, so you have to learn how to do some things. So I learned how to put in garbage disposals. I learned how to hang cabinets. I learned how to put down tile. Just learned like a lot of painting, things like that. What kind of paint to use where, because there is kind of like rules to it. Like the type of painting that needs to go in a kitchen is not the same type of painting that goes in the living room. I didn't know that. I didn't know that before getting into real estate. So you learn little things like that. You pick up little things like that, and then as you do that, then you find vendors that'll help you along the way.
Just out of curiosity, what kind of business do you have? Like, what is it? Like a S corp? What kind of? When you have you had different sorts of businesses, or what's the?
You have an LLC, right, Quincy?
Yeah, I have an LLC, and I've always had an LLC because of the flexibility of it.
Okay.
Like an S corp it's not, it don't give you as much flexibility as an LLC, and an LLC like keeps me like double arm's length away from the business personally. Like my personal cars and house and bank accounts are not attached to my business accounts.
Mm-hmm.
Okay.
I wanna go back to a question that your dad posed about, like, is it good time to invest or not? Just because I think what I'm finding with people who are interested in investing in South Florida, and just realizing like, okay, even as a realtor who's an investor-friendly realtor, every investor is not the same or is ready to invest. Anytime, at any point you find a great deal of a house that's under market in a great location that has meat on the bone, like high equity, that could be a steal. That's like a great time to invest. So it's not like dependent on the pandemic. It's not dependent on the economy. It's just the fact that this is a city that has a great, Coral Springs is a great city, for example. I have a friend of mine who brought a house to me and was like, hey, would you analyze this deal for me and let me know what you think? And I analyzed the deal. I told him, this is how much equity is in this property, how much it's worth after repair. And I asked him some more details about what's going on with the owner. And the owner just wants to pay off his mortgage. That's it. He's willing to sell the house, just pay off the mortgage. The mortgage is like $130,000. Okay. And so he wants some money on top of that. He wants like $100,000. The house is worth somewhere between $360,000, $365,000. And so, but when I'm talking to this family friend, he's like, well, nobody's going to want to invest in this house because of the pandemic that's going on. And I'm like, that's not the case, because this house will get sold. If the seller wants to sell, he needs the money. He's going to find somebody to invest in this house.
Yeah.
So that's just one example of like, independent of the recession, independent of the pandemic, that's an ongoing real estate trend. You find a house in a great neighborhood, high equity, under market, you got a deal. You just have to make it happen.
Yeah, we understand that too, because when we bought a house in Florida, and even 2008, the house never go on the water because the neighborhood was great.
Right.
We always have security, and it doesn't matter what happened in Florida. We know about that. But I got my brother-in-law who doing that all over the country. He always tell me, don't invest in Florida.
Natasha told me, yeah.
I don't know why. But he tell me Florida is not a good state. You're going to lose your money. And don't invest on a single family house. You won't make no money. And this guy is a millionaire by doing it. Then you seem like you know what he's talking about. What do you think about Florida?
Well, they live there, so.
This is where I'm going. This is what I call home. I'm a realtor here. I'm not planning on moving. I think Florida is a strong market. Average home right now, median price is $380,000. It's strong. The prices have come back up in the last 10 years.
Yeah, we know that.
But yeah, I can't. I'm just naturally going to be biased towards Florida because I live here. Yeah.
And
I think it's also, you don't find the same. So like the way that Quincy is finding deals in North Carolina, it's the same with his son is the cousin I was telling you about, Gayon, in Ohio.
Oh, okay.
For like $10,000 or $15,000, and then flips them or whatever. So.
And the invest in Detroit too. Detroit was so cheap, $20,000, $30,000.
Yes, I heard the same thing about Detroit.
Same here. Yeah, I've heard the same thing.
Say like, don't do anything in Detroit. It's no money in there. Everything is so far underwater. You can't make money. But people in Detroit making money.
Yeah, they're coming
because
back.
they understand Detroit's market. Same thing about Florida. For someone to say, "Hey, don't buy in Florida. You can't make money in Florida," and they standing on the outside looking in, things look a little bit more difficult than they are. Like me and Gayon found a awesome deal yesterday, just clicking on stuff, and we found like 3-4 deals in Florida.
So that's another thing. A lot of you guys asked about commercial or residential. So, the commercial industry is I think it's changing, Quincy, right? Because there's a lot of multifamily. Well, from what we saw yesterday on LoopNet, there's quite a number of multifamily properties that have high vacancies, and the landlords are more interested now in possibly selling. Now, that creates a conversation to be had if you're an investor and you're thinking like, okay, well, I don't know if I should park my money in single family or should I do multifamily? I mean, it all comes down to, you know, I was reading your questions and I was kind of writing the same thing as an intro to answer all your questions, but a lot of your questions are, the question behind the question is, what is your ultimate investment goal? Like, what's the bigger picture for you and your family? Like, do you want to, you know, if you're thinking on the single family side and you're thinking about flipping, do you want to get a huge chunk of profit after a holding period of maybe 3 to 4 months? Or are you trying to build a rental portfolio and cash flow from each of those rental assets? You know, which stream of income is more feasible for your family, is more achievable, sustainable for your family? Obviously, if you own a portfolio of properties, I know at one point I was asking Quincy, because I was asking about this for my own family, you know, part of the headache he had with owning several properties across 2 states was just the property management and dealing with tenants and dealing with, okay, if they don't pay on time, when does he evict them? Or, you know, dealing with, they're asking about a toilet issue. And I think you didn't have a property manager, right, Quincy? You were like doing the property management himself. Because for him, he wanted to make sure that he earned as much from his bottom line, and taking, you know, having a property manager that's going to cut into your profits a little bit. So that's one headache you might have to consider if you're going to do buy and hold strategies. But on the flipping side, the positive of it is, of course, you can make, you know, net profit margins from 40 to 50 grand, but then you're going to have to take on 4 months of making sure that you're coordinating your contractors, you're sticking to a timeline, you're making sure you're keeping track of your change orders, you're making sure that contractors are honoring their work, all of this stuff for 3 to 4 months, which you guys have history in, so it's not foreign to you. But and then also the sweat equity of that, right? Like it can be taxing to do that over and over and over again. So you have to consider that. And then there's just wholesaling, which is just, again, playing the middleman and finding the deals and then flipping the contracts to the investor for maybe quicker cash flows, if that's something you guys are interested in. Other side of it,
can
it's
you
multifamily.
explain wholesaling? Because I was trying to explain it to them the other day, but I'd like to hear it.
Sure. I think wholesaling is, to me, like a preliminary strategy of kind of achieving capital by finding under market deals and then selling and getting them under contract legitimately, and then selling them to an investor who would actually be the buyer of the deal. And you basically make your money being sort of like the middleman. You find the seller, who's usually a distressed seller or a motivated seller is what we kind of call them, and you get them under contract legitimately, and then you pass off the contract to an investor who actually wants to buy the property and flip the property, meaning renovate the property, etc. Wholesaling is just the term that is used because you're literally just finding the property and then selling it up at like a 10 grand or whatever your spread is, and like selling it up for 5, 10, 15, 20 grand, you know, sometimes more to the investor.
Okay. Sefedek, nous va gagner dans
I have a question. Well, most likely I'll ask Quincy. Let me ask you this. What did you do 15 years ago that you will advise us as a starter not to do?
Oh, man. We don't even have time. But I would say 15 years ago, if I was coming into real estate investing now, I would go. I mean, I know I hate to say this to people that's looking to come into real estate investing, but I would not deal with single family investing at all. I would completely disregard single family. Only thing I would do with single family is, like I told Gayon one time, is splurge on my house. I will buy a nice house. That's it. I will go directly into multifamily, and I would go directly into networking and buying and establishing the relationships with outside partners to partner and syndicate those deals. That's what I would do if I was coming straight into it. I wouldn't not go into real estate, wholesaling and renovating of single family homes because it cost me so much time to manage other
Yep.
people. So like contract, I don't know what
That's a
these
great.
contractors come from. They're
Can I?
from another planet. Go ahead.
So great point. I'm just gonna punctuate what he's saying right now. So I've known Quincy for 3 years. He was managing, I think you had like 10 homes at the time, right?
Mhm.
And almost every other week it was like a headache for him. And I know you guys, Nancy and Mr. Duré, I know you guys have done flipping before, but like it was a headache, and he would make me aware of how much it was a headache. I remember reading a blog that was talking about how, when you get into real estate investing, you start flipping homes. A lot of times people get into real estate because they want the financial freedom, but they also want the job freedom. Like they don't necessarily want to be stuck behind a desk, behind a computer, and like having to deal with all of the taxing work of like, okay, managing another team, because it's just another job. So what the blog was talking about was just how much, and it was this one investor, I think it wasn't Bigger Pockets, but it was some blog, is this one investor who's talking about how you need to get really sold on how you want to live your lifestyle and how you want to make your money, and not just find another job for yourself that's going to take away your time freedom. And so what I found with Quincy is he felt like, this is me speaking as a friend, when I was talking to him about why he's transitioning to multifamily and commercial, because he felt like it was very taxing. Am I correct, Quincy? Was managing all of the properties very taxing?
Yeah, it was to the point where, like Gayon was saying, it was something going on every week. Um, and I didn't want to deal, like the cash flow was great. It was great, but it just was like, ah man, I just don't like what do they want now? And you'll get that from how I built it. I went in and got those single family homes. But to the question, um, me having 10 homes, 10 separate locations, 10 separate um situations for lending, leveraging money, the whole nine. Um, and then you compare that to one location, 10 doors on a multifamily. So the situation was like, if I got 10 different locations, I got 10 different financial situations. One guy leaves in one of those situations, then that house can turn in from making $600 to me owing four. Just that quick. So it's just that quick. Like now I was in the positive 6. Now I'm in the red 4. Well, with the apartment, one guy gets evicted, leave out. I'm still good. I still got 9 other people paying their rent on time, and then it is less of a financial burden if 2, 3, 4 of those guys leave. Whereas if 4 people would have left out of the 10 homes, I'd have been hurting like really, really bad. So it was always important to me to always be on top of the complaints and the things that the individual rental houses needed, because frankly, I didn't want to lose the cash flow. And then, if you're a victim, you're 2 months without pay, and then you got to go in and clean up and then market for another renter. So that's probably another month and a half. So you're looking at 4 months, no pay, no income on this one house. So 4 months, $400. It's easy math about what you just lost in a year's time. So it was at that point I was like, well, multifamily just makes so much more sense economically. It just makes more sense. Now, the thing is, the learning curve. There is a huge learning curve, and um, to explain the difference is real estate investing in single family homes is like going to the park. It's a real easy situation to get into. It's got plenty of laws to protect both sides, the buyer and the seller. It's the contracts are formatted. Everything is regulated through the banking all the way up to the insurance and taxes. commercial property is not like that. It's you are swimming with the sharks. So you better be a shark. You got to put your shark fins on and at least pretend to be a shark until you become one. Because there's no regulation, there's no laws to protect you. There's no banking regulations to aid in your. There's no down payment assistance. There's none of that. So it's all investors, and it's all expected that you understand that you're in a situation where you're buying from an investment point of view. So there's absolutely, I say again, there's absolutely no protection for you. There's no regulation, there's no legal, there's no commercial contract in each state that it has to be on. As a matter of fact, as I was showing Gayon, how I worded my LOI with multifamily, it's a precursor to get the other investor to understand that this is how we're going to draft our purchase agreement. So in that aspect, a lot of people like to go into single family to understand into what they say graduate into multifamily. It's not necessary as long as you understand that you're swimming with the sharks.
Who manages your multifamily properties? As in the everyday.
I had a local property manager in the area. So,
Okay.
and all I do is they get 5% of the income.
Okay.
And all I do is look at the reports. So
Okay.
I want certain reports on a monthly basis, quarterly basis, annual basis.
Mm-hmm.
So and I can just from understanding profit and loss, understanding a rent roll. You don't have to, for me, you don't have to go out to the property and say what's wrong with it. But if I look and I know that maintenance is normally a $500 fee per month, and then I see 3,000 on 1 month. Well, what happened? What happened here? What happened? Why are we spending $3,000 right here? What explain that? So that's the, like when I say swimming with the sharks, it's not just other investors, it's everybody in the business is trying to get paid.
Yeah.
And like you have to understand it and treat it like that. You have to understand it and treat it like it's a business and that everybody's trying to get paid. And oftentimes you're the last one to get paid. So you have to be on top of everybody. And like I say, be a good manager of people. Understand that you're just managing the manager. Break away from it. Take away that emotional tie that most folks have with a single family, and understand it as a multifamily. It's just a business. It's just numbers. I don't care. It don't have to be sexy. It don't have to be anything to grab my attention. It's just got to be, the numbers have to work in order for me to get excited about it and go into the deal.
Have to be able to show you the money.
Yeah, that's the sexy part.
Let me ask you, how, where you choose your investment?
For
Like I say, I got my brother-in-law. He
Mhm.
does invest on that. He usually go to the road, to the poor neighborhood to invest because less regulation than if you go to upscale neighborhood. How about you? What do you think about that?
I just don't, when I'm looking to get a multifamily, I'm not trying to be in what I call a war zone area. Like they got classes of property, got A, B, C, and D. I'm staying away from the D properties. I'm staying away from the D properties, and I'm staying away from the A properties. So I want to be at the B and the C properties because
Why you stay away from the D?
the D properties, the location of the D properties are
You need a gun.
typically they in the hood.
You can't get end users to rent there.
Yeah, it's in the hood,
hard
and
to
then
rent.
when you get them to rent there, you know them the type of folks that won't pay and then pack up and leave, and then you expecting Like, it's the first. I ain't heard from him. I ain't got no money. What's going on? You call, be like, oh, Mr. Smith, I don't live over there no more. I moved out there 2 weeks ago. You're like, what? So, like, I am not, you stay away from that crowd of people. And in the real estate industry, they classify those properties as D. The A properties are the best of the best. Those are the best. Those are the ones in New York and the brand new properties that just got built. You want to stay away from those because there's no opportunity to do anything to make money.
Yeah, and those are usually
B and the C
institutional
ones-
investors, anyways.
Yeah,
I mean,
those are the like the big institutions investors that they just want. They have money to park somewhere and they just don't want to lose money. Most of those people
absolutely.
that are syndicating,
Not value add.
right?
Yeah.
They is 5 or 6. They create an investment group and they may have $10 million in the bank. They're only getting 1% or half of 1%. So they don't want to lose against inflation. So they can get 2.5 equal inflation over here. Good. I'll park my money there. They're not trying to look to make money. So for me, I'm looking at B and C because I can get a C property that's in a great location. It's in a great cycle in the real estate, but
Yeah.
maybe it has a bad property manager. So like the property
Right.
we looked at yesterday, it was a great property, but it was like what 60-something% occupied. I was like, why is it? So you go in and you figure out what's that problem, and that's where your
Yeah.
profit is at. So if you can take a property, buy it at 60%, and you can stabilize it and get it at 90-95% occupancy for a year, that gap is where you create an equity. Now when it's time to refinance out, I refinance out my partners. I take a little bit in the pocket, and then I still keep the asset.
Yeah.
And so you mentioned a couple of times the networking, that you networked. You met a lot of people when you were at court and buying an auction, etc. Do you work with the same loan people every time? How do we look to network with the different people that will need our property?
What was it again? It was Gayon told me this about like a year, maybe 2 ago. It's like she was reading some book and she was like summarizing the book, and it kind of hit me. It's like most of the things that we need are, you can find them at your left and right. So the people that are closest around you. Like I say, my uncle he's a deca millionaire. So I reach out to him not only for advice, but I ask him for money. Hey, I need this deal. It's 200 grand, man. I need it.
Yeah.
So I can either offer you equity in the deal or a return in the deal. So and then you find, just say for instance now everything is tanking. Everything is tanking now, and you have people looking to pull their money out of these IRAs. Where are they putting that money at? Some people have $300,000, $400,000, $500,000 in the IRA, and they pulling it out of the market. Where are they going? So that's an opportunity for you as an investor to come in and say, what are you doing with your 300,000? Here's an opportunity. You was making 0.5% over there anyway. Here's an opportunity for you to make 10% on your 300,000. And then you get those people and continue to use those people. And then if I'm gonna tell you what, if a guy can make me 10-11% on my money, I'm going to use them again. So, it's just that reality of finding someone that want to make a higher percentage, because a lot of people don't have the tolerance that we have as investors to go in and do the work and get the understanding and do the due diligence on the properties and learn contracting and team building and all that. So it's a premium for that knowledge. So, and that premium is, hey, I'll use your funds to close this deal, and I'll give you back quadruple what you can get in a bank in the same amount of time.
Now, I wanted to ask you, what do you think of the 203K loans?
I don't know. I haven't did anything with them. I haven't get into. I don't even think I know of anybody that has actually done any 203K.
Those are the FHA loans?
Those are the new loans that are out that allow you to buy a house that's needing rehab.
Right.
You can attach
And then they give you the amount to buy the house and renovate.
and renovate it.
Yeah. But I don't think they're for investors.
Right.
I think they're for single, but to do what you guys are doing, buying a house, renovate it, staying in it, sell it in 18 months, that's smart. I think that if you can do that with that type of loan, that would be great. I think it would be even better if you buy a quadplex, because that's still a residential.
Yeah, that's actually true.
So if you can find a quadplex in Dallas and buy it with a 203K loan, live in one, rent 3 out, 18 months, move out, do it again. So I think that's smart.
Okay.
That's a pretty good strategy to get it in and maybe refinance it out.
Right.
Refinance it out into some other kind of investment loan where you can go in and get another 203K loan. But I'm not 100% sure of like how many times you can do that. But I know, like, from my own situation, I had a friend that we went to Novelwood named Chad. He was a military veteran as well. He used his VA loan to do that. He bought a quadplex and he's living in one and renting out 3. Now he's trying to figure out how to get out it. Do he have to refinance to get his VA qualification back? So it's a lot of
Stipulations.
stipulation unknown that, like, for me, I don't know. I just rather find some private lender,
If I
find
understand
friends
well, you
or
need to
somebody
stay
that would do
1
it.
year. If I understand well, you need to stay 1 year.
Yeah, I know that there's some
You
kind of
can pay
seasoning
the cost.
requirement. I'm not sure what it is, but I know those seasoning requirements are changing.
Yeah.
When you were in the courts and et cetera, were you buying taxes and buying deeds and stuff like that? Or
I got into when I was doing the when I was doing the renovations and things like that. I ran into somebody that was doing classes on tax liens and deeds and certifications and things like that. So I went to the information seminar and I learned it. And when I actually went to a tax auction, I found out that there's what do they call it? A redemption period in in
So tricky.
tax investing. See, this is the things that they don't tell you.
Yeah.
So, for instance, if I lose my house to unpaid taxes, and Gayon goes down and buy that tax lien certificate, and without understanding the redemption period, she goes right into, hey, I bought this thing for $5,000. It's worth 300,000. I'm gonna put 50,000 in it, sell it for 350. I'm gonna make 270, 260, laugh all the way to the bank. So without understanding that there's a redemption period, she goes in and renovate the property. She 5 months in it, put it on the market. Now I come back in and pay the $5,000 before my redemption period is out. Now I can claim my house back. So thank you, Gayon, for renovating my house. I appreciate you. Have a good day. So
Even love her.
right. So to understand that, like, for me to understand that, I was like, well, then, so when they tell you this stuff, they tell you and they give you an example like, oh, Quincy bought the tax lien for $5,000. He made 170,000. They're not telling you this over a 2-year period. Or 18 months, because I think Florida is 18 months redemption period, maybe even 24 months. Most states are at least 12 months redemption period. So is it worth it?
Very long time. Yeah.
So I think that's like doing tax deeds and things like that. I think that's a strategy that you add on top of something that you're already doing. So if I'm doing renovations and wholesales over here, I got a tax deed that I'm waiting on for a year while I do this part of my business over here. Now, if they don't redeem in a year, boom, now I got a big chunk of money that I can make with this while I'm still over here. So I'm buying tax deeds with the understanding that I can't do anything with it for a year. And then if they do, the great thing is, if like in the situation, if I had to go pay the redemption, I have to pay that plus, I think it's like 18%. So you make at least 18% on your tax deed if somebody redeems
So
it.
you do get the tax money back. Yes.
Yeah, you get your money, but you get your $5,000 back. You paid for the tax deed plus whatever percentage.
Interest rate, yeah.
What's your understanding on buying a deed from somebody who lives in the house?
I wouldn't do it. I've seen and I've heard of people doing it. I don't like to get into any situation that where I'm gonna buy from somebody and they remain in the property, because they had a problem with maintaining whatever that situation was. Now you come in and fix the problem, they still got the same habits. So whatever habits put them into the problem, whether it be they didn't pay their taxes, they behind on their mortgage, whatever it is, whatever the situation was for them to be in that financial distressing situation, they still have those same habits. Just because you went in and fixed the problem, that don't mean that they're gonna pay you. So if I'm getting into a situation where I'm going in and I'm investing in the property, you got to go. I'm gonna find somebody else either to rent the house, or I'm gonna renovate the house, put it on the market, and sell it. Something is going on. I'm not going in to fix the problem for you to live back in the house.
I know people who do it. The person doesn't stay in the house. They just buy it. Now they got a deal with the bank.
Yeah. Now, well, I've done that. I've done that, and then I've done it like twice in 2 of the homes that out of the 8 that I own. I did like that. It was creating like a wrap. They call it a wrap mortgage. So, and one of the homes, you have to be careful with, because the bank can call the loan at any time. Fortunately, it was a small loan. I think it was only down to like 18 grand. So I was able to like borrow some money and pay the bank, and then use the rental income to pay the guy back the 18 grand that I borrowed. But you have to be careful with it, because when you create those wrap mortgages, the initial bank is not involved in it. So if they become aware of it, then they can call the loan, and then you have to pay whatever it is. So if you do that and it's $100 grand loan, and you don't have $100 grand, so you got to figure out a way how to borrow $100 grand, pay for the house or something, or just walk away from home.
Okay.
Cool. Sophie, Fred, do you guys have any more questions?
Oh, Brother Yves, I had mentioned to you about, purchasing land and then developing the land and maybe building like an apartment complex or a commercial property, like a storage, those storage sites where, you can rent it out to tenants for, maybe auto repair or like shops. Is that a good idea?
Yeah, I'm all for any kind of commercial anything. Simply because like people pay in commercial situations. Buying commercial land could be a little bit more expensive, unless you're buying residential land and getting it rezoned. That takes a little process. It shouldn't be as difficult, but I went through a process where I was buying some land, and like they was taking me through a ton of problems just to have it rezoned. So I eventually walked away from the deal. It was a great deal. Had the land in the contract, and I was going to build, I think it was 11 homes on the land, and the people just wouldn't in that area. If I guess, I don't know, that people like me wasn't building over there. Like Gayon said, that this industry is not too many of us. in it. So we go through things in it, and sometimes you have to walk away. Like I had money tied up in this deal, and although it wasn't money that I spent, it was money that I couldn't spend, because if everything worked, then I needed to have the money available to pay. Um, Engineers, architect, contractors, zoning officials, I had to get that paid, and getting the land soil tested to make sure that it can be developed. Um, so that took me such a long time that I just went and pursued something else. But that is
Tell them, Quincy, tell them the time period though, because I think it helps them understand, like with development, it's a whole nother ball game than redevelopment or, or just investing.
So development can be like it can from the time that you buy raw land to the time that you cash out, it could be a year, 18 months. If you have a problem, it could be 2 years. Like for me, I know that this was a great deal, so I think maybe I hung on to that deal for like a year, Gayon, maybe more. And that was like without even spending money on it. I had plenty of issues with that deal. One was the owners was in another country, and two was the people at the zoning office wouldn't work with me, and then they would pretend, oh, me no speaky, how you got a government job and speaky, like come on, man.
He's talking about Miami guys, sorry.
Yeah, so they were it was a frustrating thing for me, and because I knew the potential that the deal had, and I had it in contract for great, and I had a great contractor, and like I said, my uncle, he was all in on this deal. He was actually going to fund all of it, and we was going to split the profits on the back end. So I didn't even have, outside of the money that I put down for the contract and the money that I was going to pay the architect and the engineer, I didn't have any other financial liability on the property. My uncle was going to fund it all. So I was trying to have this one work, but it didn't work. It didn't work. And I recently like rolled by and it's still there, and I was tempted to call the guy back and say, let's try it again. But I don't know. It's just, I don't know if I have the patience to try it again. But maybe.
It might be
And how
desperate
much?
now. Pandemic.
Go ahead, sorry.
It might be desperate now. It's a pandemic. Just try again.
True. It was like pretty good profit. It was gonna be a nice profit. The homes was gonna be some 4-bedroom, 3-bath homes in the area. The houses were selling for a little over 400 grand, and it was only going to take us about 150 to build a house. So with 150 each lot, we was going to get it under contract for 30 grand per lot. So it was 11 lots. So 180. So call it 200 grand to have everything done per lot, and then it was going to sell for over 400 grand. So take out closing costs at 10%. Boom, that was our profit per house. So
I lost you for a while. I lost you guys for a while. I don't know.
You lost us for a while. We was talking about the a development piece that it is development, like plausible, and I think it is. I think buying raw land. That's if I'm doing single family, that's what I'm doing. I'm not renovating anything. I'm
what
buying
I'm saying on that before you left. If we're gonna do that, we gotta do our diligence first before we put any money.
Yeah, like you can, like, here's the thing that I would tell, like the young man asked about 15 years ago, what would I tell myself or an investor? Like, be aggressive, like have some money that you're just not going to spend. If it's 2 grand, 3 grand, 4 grand, have some money somewhere that you use to just tie up property. So if you find a deal and they want $2,000 down. Boom, got it. Put it in a contract. Put it in escrow.
You
It's
mean
there.
earnest money, not down,
Right.
but earnest money.
Right.
Sorry.
Put it in escrow. Like, have that money somewhere, and be aggressive with it. Make offers. Make offers. You can't make money unless you make offers. So make offers, but be aggressive. And the biggest thing from going from like, oh, I want to invest to I really want to invest is when you get the contract and you have to put up like $1,000 or $1,500, and like it's go time now. It's like I
Yeah.
got 15 grand on the line, and I ain't trying to lose it. So I'm about to do the steps that I need to do in order to see if this deal is really going to work.
I think you need to also, pause. Quincy, when you say aggressive, you're talking about making offers, even if they're lowball offers to any and everything you see out there. Because I think people don't recognize, like, this investment game, it's very competitive in every market. It's not just South Florida. Like, there are institutional investors out here in single family and in the commercial side. So when it comes to being aggressive, it's not just looking at properties and contemplating and just, crunching numbers by yourself. And then it's like, you really do have to do this in mass.
It's be aggressive, be aggressive. One thing that a mentor of mine told me was that if you make an offer on a property and the owner accepts it, you was way too high. So when you go in and make an offer on a property, like, you should like almost like make somebody mad. Like, I don't have any like
Talking to my wife now.
like I said to you, I don't have no personal feelings in my strategy. So, like, for instance, there was a property, a single family property that I wanted to buy. I liked the property. It was on the market for like 65 grand. And I didn't have 65 grand. I had money tied up somewhere else, but I had just closed a wholesale deal and I had 18 grand. So I offered him 18 grand. I was like, I can offer you 18 grand.
65 grand.
Yes. And I offered it. My realtor was like, man, that's a low ball offer. Don't do that. You're going to disrespect the people. I was like, his name was Rice. I was like, Rice, put the offer in, man. Just see what they say. The realtor emailed me back directly and was like, Quincy, do you really want this house? I was like, yeah, I'll buy it for 18 grand. And he signed the contract. A $65,000 house they had on the market. He just wanted to know if I was for real about buying the house. Am I just putting this offer in just because that was 2000?
Where was this though, Quincy? Help them understand dynamics. Where was this?
This was in Virginia, right outside Richmond, Virginia.
This was when though? 10 years ago or 12 years? What? 15 years ago?
2009.
Market was down.
Okay.
So, and this was the time when, but I say that to say to you that don't be embarrassed. Don't be embarrassed about making like whatever your numbers. Like, me and Gayon was running numbers on some deals yesterday. Whatever those numbers are, like, trust your numbers. Trust your numbers.
Another thing. Go ahead.
Don't go and try to fall in love with the property. Oh, this is gonna be my first deal. I can just pay 10 grand more. Don't do it.
Unless it's something you buy to live.
Yeah. Now, if it's like I say, splurge on your own house. Like, I will overpay for a house that I'm gonna live in. That's what I want. I want it. I'm gonna live there. We're gonna make a family there. Everything. You know what I'm saying? I can do whatever I want. I'll sacrifice that. It's in the location I want. Everybody's in love with it, so let me get that. But outside of my personal place I'm gonna live, I'm stingy. I'm gonna be very disrespectful with my offers.
Yeah. Here's another thing too, that it takes time to recognize, but I'm gonna say it for the sake of saying it because I think you guys need to hear it too. Not all realtors are equal.
Yes.
So I know, like, it's funny. My introduction to my master's degree program, I was one of maybe 3 people who were not licensed realtors in taking my master's degree. Everybody else was probably a realtor in my class. I think one of my classes at least. And all of them would say this. They were like, yeah, realtors aren't like, they BS everything. That's like the common knowledge about realtors. They're a bunch of BS. One of the reasons why I got my master's is because I didn't want to be a realtor who was full of BS. Not only that, there are tons of sellers who are overpricing their property, commercial or residential, overpriced. And all they need is someone, one person, either a realtor or buyer, to just check them on their numbers. If you don't have an investor-friendly realtor who's willing to do the analysis for you, to research cap rates, if it's on the commercial side, or to research like the market analysis, and then actually, go head to head with the seller or the other realtor and say, hey, your numbers are off, then you're going to be missing out on opportunities. Okay. Because you're going to always feel like the seller is right. And you're going to feel like, nah, that it's worth that much. Or this is the going rate. Because that's how all the sellers are going to pitch their property. Like, this is the going rate. I can get this much money for my property. No, sir. This is what the comps are. This is the cap rate. You're doing it. You know what I mean? And it takes time for you to realize that. But I mean, I've heard realtors literally lie to their buyers about how, oh, you're going to offend the seller. No, you won't. Yeah. The list price to sale price is a 5% difference.
Yeah.
You won't offend anybody. There's concessions. There's all this stuff that we have access to. But if you don't have the right realtor, and I'm not just pitching this because I'm a realtor, but I actually get really offended when I hear like realtors lie to people. I'm just like, this doesn't make any sense.
I mean, also they're looking at their pocket also, because if you're offering 20,000 less, that's 3% of 6% that they're taking. So who's really looking out for you as the buyer?
Yeah.
Exactly.
What they do?
And unfortunately,
they want to sell quick.
Right. But it's funny. What's funny is like sometimes the difference, we're talking, on the single family side, we're not talking big swaths of differences in numbers. We're just talking like this person could gotten it 10 grand less or whatever. So it's interesting because it's not all about money. It's literally, we're talking about people who are just being lazy.
That's perfect right there. That's perfect, yeah. That is absolutely perfect. When you're saying like the difference between what multifamily and single family can do, like that 10 grand difference is just 10 grand in single family. But like if you got a 20 unit apartment and you go in and you raise rents $100, that's 100 times 20 times 12. So I mean, like the possibilities are just so. I get a little bit excited. My bad.
Me too.
I get a little bit excited, but yeah, don't be afraid to make offers, and don't be afraid to make like true trust your number type offers, and it's not a personal. It's not personal, and that's why I love multifamily. It's not personal. Everybody in the situation is our investors typically, and we all have an understanding that, hey, if I'm giving you this numbers, I've ran my numbers against your numbers, and my numbers are telling me your property is worth this.
Right. Yeah.
So one thing I do with multifamily is I like to probe the brokers that list the property. So I asked them as we was talking. I was telling Gayon, ask the guy this, ask the guy that, ask the guy. So you ask them like, what's the market rate property in there? What's the market cap rate? What's the market rent? What's the market that? So I'm taking the numbers that you saying were good numbers, and then I'm gonna run them my way. And I'm come back with you and say, okay, well, here's my offer according to your market rates. This is what you said the market is doing in this area, and here's where I need to be at to purchase your property. Okay. So it's easy. So it ain't no playing games up in there. But with single family, you gotta understand that everybody's in something. Even with multifamily, like when you're talking to these realtors and brokers, that they are trying to sell something. So they might do a little inflation on their numbers just to entice you to get to look at the property. So don't fall in love with the properties. Don't fall in love with the opportunity. Just do your due diligence, stay true to your research, stay true to your numbers, and then make offers. Be aggressive.
Sister, are you licensed for Texas?
Oh, me?
Yes.
No, I'm not. I'm not. I was trying to get Natasha to get licensed in Texas, but she decided to not go for it.
I tried to.
All right, everybody. Let's
You don't need a real estate license. This is something I always been saying.
This is So that's another thing too.
You
Is
don't need a real estate license to make a ton of money in real estate.
You don't.
I made the
Quincy is
money.
anti-real estate license, by the way.
I am. Because when I had my license, I like made less money, and I was like, this is stupid. Like I'm making less money because like according to once again the single family area is so protected. So if you have a real estate license and you're in an investment situation as a single family investment, then you have certain disclosures that you have to sign and make known that you are a realtor, and then you looked at kind of differently, like, oh, this realtor is making 30 grand on this property. That's so unethical. That's so immoral that he would do that. So I was like, I don't have time. You guys can have y'all license. And I'm gonna take this thing and I'm gonna do it the way I know how to do it.
Yeah.
So I don't. It's so much stuff and disclosures and things you have to sign, and you have to do all of these different classes if you're gonna invest.
Yeah.
So it like I said earlier, it just wasn't worth saving the 3% that I was trying to capture.
Yeah. So we're gonna wrap up. This is gonna be your last question, okay? And then Sophie and Fred, if you guys have one more question.
If you don't have some, sorry, go ahead. I'm sorry.
No, you're fine. I'm just saying that we're gonna wrap up and let them go.
Did they want to go?
Time, but yes, Daddy, they do. Okay, they don't want to tell you that, but they do. You're wonderful, but still, they have a life. Okay.
I understand that now.
All right, thanks, Dad.
Like you said, we got a bargain and everything.
Yeah.
Yes, he did say that, Dad. You're such a quick learner. Wow, it's amazing.
Yeah. You see, I was gonna ask a wonderful question. I forgot.
Answer the question.
No, it's okay. Go ahead, Brother Yves. Go ahead.
No, you can go, sister.
You forgot his question, Sophie.
A simple question is like, so if you're not pushing for the real estate license, how do we get our comps? Like, for instance, if we do find a property, a duplex or a quadplex that we're investing in, how do we find the comps if we don't have a realtor involved?
So the great thing about multifamily is that comps are irrelevant with multifamily. So why do I say that? Because you can have a 20-unit property on the street, and you can have right across the street a 100-unit property on the street, and they can be absolutely different. Absolutely no way. So what you're looking at when you're looking at multifamily is how the property is operating. So you want to look at profits and expenses. That's what tells you if a property is worth investing in the real estate, in the multifamily real estate investment world. It's not comps. Like you can do away with comps. You ain't even never gotta ask for that. If you ask somebody for comps in multifamily, they're probably gonna laugh at you like, "What you want comps for?"
Right. It's not the same as in the family.
Yeah, so you just like, I'm looking for the profit and loss statement. I'm looking for the trailing 12, what in the industry is called a T12, and I'm looking for a rent roll. If I get those three things on a multifamily property, I can make a decision to whether it's a good property or not, and it's something I want to invest in or not. That's all I need. I don't need anything else. No realtor, no comps, no nothing.
He's anti-realtor, so there's that.
I am not.
Dad, Mom?
We're gonna let them go because we're gonna use them so many times. We don't want them to be overwhelmed. You know.
Yeah, I mean, like for me, I always tell folks I'm an open book. Like, I don't know if you guys have my contact, but you can email me, call me, text me anytime. If I have the time to talk to you about it or discuss it, I will.
Okay.
Thank you, man. I appreciate you.
Mama got that thing.
You guys, thank you so much for your time. Like, I feel like we've
You're
learned
welcome.
so much today.
Not a problem.
Definitely have a lot to discuss. I really appreciate the wealth of knowledge. We hope to be like you guys when we grow up.
Yeah, thank you, Quincy. Thank you. Greatly appreciate it. Have definitely shown us another level of this real estate, and we'll definitely be keeping in contact.
Not a problem.
You're welcome, guys.
Both of you.
Thanks for the info, and then we'll keep in touch.
All right. Thanks, bro.
Thank you.
All right, guys. Thanks again. Thank you.
God bless.
Natasha, let me know if you need anything else.
Okay. Good night, everyone.
All right.
Bye.
Have a nice Memorial. Stay safe. Put your mask on.
Yes.
Corona's over in South Florida.
My mom is a recovered.
The crowd.
My mother is a recovered corona patient.
Really?
Yeah.
Oh, that's awesome.
Yeah, she tested negative for the second time this past week. Yeah, so
Awesome.
Oh, that's awesome to hear.
yeah,
Yes.
Yes.
lungs intact and everything. So
Awesome.
amen.
Now it's time to go chase that paper.
Right.
I love my wife.
All right. Bye, guys.
All right.
Bye, guys. Thank you.
All right. Bye.
God bless.